And welcome to the Market Musings podcast, where today we welcome back the macro economist Henrik Zeberg. Now, we spoke to Henrik about 6 months ago. It was just during the first lockdown, certainly in the UK anyway, back in May, as it was sort of coming to a bit of an end. And of course, we got Henrik on because he was making a lot of noise on Twitter, talking about gold to $800. So, good morning, Henrik, and welcome back.
Good morning. Thank you for having me on.
It's good to have you on and talk again. And of course, we have Kenny as well joining us from Scotland.
Yep. Hi, Henrik. How's things?
Hi. Good morning. All good here?
Yeah, it's quite an international podcast this morning. We've got Scotland, Denmark, and Holland.
Yeah,
they're very pan-European.
Yeah, it is. Yeah.
It is.
Yeah,
I wonder who's actually closer. Am I closer to you, Henrik, or is Mark closer to you?
Oh, I wouldn't know.
It must be pretty much the same.
It's probably very
like
similar. That. Yeah, it will be.
Something like that.
Yeah. So yeah, well, first of all, how are things with the COVID, Henrik, over in Denmark? I know in the UK they're going into well, they're actually in another sort of lockdown situation, which is quite bad. Over here in the Netherlands, it doesn't seem too bad. It seems to be cracking on. I don't know if there's talk of that we're over the second peak, but I kind of look at these peaks and think, well, you know, we're always going to have them. So, you know, I don't think it matters when we're over them really as such, because another one will come along shortly. But what's the feeling for you over in Denmark?
Well, here it seems like it's gradually increasing the number of cases that we see. So I think we had I'm not sure it was a record number this morning, or yesterday. Right. I mean, but it was. But I think it's something that when we're also seeing that we further measures to lock down society is being taken, and we of course have this mink case where we are killing all the minks in Denmark now because they were. It was feared that they were going to produce some kind of mutated virus. So that's what everybody speaks of these days. But let's see. It seems like. I don't think the second wave is over. And if we look to history and we look that we're going into into winter, it seems like this is something that will be progressing and becoming much worse over the next coming months during the winter.
And Kenny, what's it like for you? What's the feeling up in Scotland?
Yeah, it seems to be pretty stubborn. It doesn't want to shift at all. I'm pretty fortunate that I'm in a reasonably remote area. But just sort of 5 or 6 miles down the road from me, they're talking about putting that whole region into the highest level of lockdown, which is number 4. So I'm currently in number 2, hopefully going down to number 1. But like I say, only 5 or 6 miles away, they're talking about 4. So it's very regional. Obviously, you know, the more densely populated areas are going to have the worst cases. But yeah, it's very, very stubborn to shift at the moment. I think we've probably peaked, but it's not really coming down either. It just seems to have sort of plateaued at the moment. Okay. So, just staying vigilant.
Right. Well, it's interesting because I don't get that. The feeling here is certainly for me is not sort of not life as normal as such, but it is. People are sort of carrying on, but. Maybe it's just me. I don't leave the house very much, so maybe I'm isolated from it. I don't know. But how do we feel then about the vaccine, Henrik? Do you think that the vaccine is a huge breakthrough? Is it going to save us all from this awful virus?
Well, I think, eventually it will. But isn't it like what is being said that it is great to have a vaccine, but it's not really working before the people are getting vaccinated. So I think it is about getting us to that point. So, and that can be months. So that doesn't exclude the fact that it's about what kind of frequency or sequence are we going to see things in. And I think we're going to see the number of cases becoming much worse. Unfortunately, we're also getting a lot more fatalities in that due to this sort of outbreak. And then, of course, by the end of some time, we will see the vaccine come out and hopefully we come to a better place. And if we look to history, I think looking to this Spanish flu back 100 years ago, it's really that we're seeing exactly the same kind of pattern. So a small kind of spike, and then a much larger wave 2, and then something where we are starting to get on top of it, whether it's going to be a vaccination or we're going to we simply eradicate the virus from social distancing or whatever it is. But I think yes, vaccine will eventually become the solution for this, but we may be one year or a half year away from that still.
Yeah, it might be a year or so away before it actually feeds its way down. But of course, this your sort of outlook there on COVID feeds into, I guess, your your economic theories that you're sort of thinking about. And I remember last time we spoke, a lot of your theory was based on these congratiev waves or congratiev cycles, which is the idea of sort of waves, isn't it?
It is, yeah.
And seasons almost. And I know you were calling gold to $800 and a strength in the US dollar as people go to liquidity. And I remember I listened back to the podcast yesterday, and I don't think you said it as clear as actually saying it, but I seem to get the impression that you were predicting in about 6 months' time that this sort of deflationary phase was coming. So we are actually about 6 months.
Oh, we're there now. Yeah. So I was proven wrong. Yeah.
Okay. Right.
No, but that obviously, the difficulties of some of these things is obviously always timing, and timing is of course one of the most important factor in all of this. But is that the same to say that the world has changed and we are now in a much different place? No, it's not as I see it. I think we are in fact in a much worse case place than we were back 6 months ago. We have seen some asset inflation that has been going on into crazy levels now, and I think that what we're going to see ahead is going to bring a lot of that coming down with in a very unpleasant way. So yes, timing was wrong, admitted. What I did not see, like with the Kondratiev winter, we know something bad deflationary is going to affect the economy, and this time around we saw that the trigger for this was the outbreak of COVID. But does that mean that now we're through it because we've been through the first phase of it and everything is fine? To me, that's not the case, because if I look to what would really tell us whether we were through the Kondratiev winter, would be to look at something like debt levels in the economy. And if you look at debt levels, they have just been going up like rockets up. So right now we're trying to fight fire with fire, and eventually it's going to prove that it's not working, and we are going to see something collapse before the end of it, and inflating assets even more than what we had before with the kind of economy that we're looking into now. Looking at claims, U.S. claims, for instance, U.S. unemployment. You look at U.S. claims; they've never been higher for the last. They have never for the last 100 years. They haven't been higher than the level that we have now. So I mean, nothing has been solved. What we have done is that we have put a lot of liquidity onto it. But as we're going to see soon, what my expectation is that it'll become very clear that liquidity will not solve solvency problems.
Okay, so this liquidity is obviously it's the printing of money, isn't it? And you think that's then it's just inflated assets even further than they were 6 months ago?
Oh yeah, much further.
Okay,
and it's to ridiculous levels. I mean, we're looking at stocks like Tesla with PE levels above 1,000. You can look everywhere. We knew that we could see, looking back, we know 1929 was a bubble when we looked at certain levels. When we look at the same kind of indicators for 2000 and 2007, we could perceive them as bubbles. And we're looking at the same kind of indicators today, market capitalization to GDP, for instance. We are at extreme levels, and I'll not be the one saying, okay, so this time is different. We have simply seen that too many times before, and this time will not be different, in my opinion.
And this will happen then in the winter season, the Kondratiev season. That's when you have this deflationary bust, as you call it? Yeah.
Because as I see it, of course, by the end of it, we're going to see inflation, and
yes.
The inflationist will be right. But will we get it now, or are we going to get it at a later stage? And I'm saying I think we're going to see one more deflationary leg, and nothing has changed for that since my last appearance here. And if you look at the chart here, I don't know if that's if you want to do that, we could take a look at that,
yes.
and maybe explain why is it that I see this deflationary bust before we get to something quite different. And I think it's actually the first chart that I send on to you. So that's the commodity index.
Commodity index, yes, I've got that. Yep.
Yeah, and what we see here is simply so it's the GSCI commodity index it's a monthly chart, and what we see is what is called a descending wedge, ending diagonal, you could call it also. Mm-hmm. And to me, these are one of the clearest patterns that you've got. And got them in many charts for commodities. And what it tells us is that, yes, we are coming to an end for a major down cycle. And eventually we're going to see a secular bottom, which is the secular low in inflation that I put in here. But we need to see the structure finalized first. And getting a finalization of the structure really means that we're going to see another dip down to the trend line, the blue trend line, or actually below it. Very often we see a throwover. And to me, so there is a bullish element to this in commodities, and there is a bearish element. The bearish part is the shorter term, which is we're going to see the next decline. And we're going to see a deflation phase there, because that will be quite a decline if I'm right in this kind of drop. But when we get there, it will be the point where we see a new economic regime come up, the new inflationary regime. So try to think of it. Since 1982, we've seen inflation becoming down. We all know that. I know how old you guys are, but I remember my parents told me about that. We had interest levels at 15 or 20%, or what were they back then? And since then, we have seen inflation and interest levels coming down. And that's because in the bigger perspective, like in the Kondratyov wave perspective, we are seeing these cycles of inflation. So they go higher for a long period of time, and then they come down for a long period of time, but eventually they will come to an end. And this is where we are getting, and I see it as we're coming to a very important bottom in inflation, which can be compared to the kind of top we saw in 1982. And then we're getting onto a new inflationary regime, which will take us onto a new path for the next coming decades. And I think as part of that, and we can get into that, we're going to see initial stagflation. Mm-hmm. But and I can explain why, but I think the next leg down here is going to be deflationary, because we haven't completed that leg, and we haven't completed the structure. We can see that also if we look to a lot of other commodities. We can look at rice, lumber, wheat, whatever have we. All these different commodities showing the same kind of picture. Another leg down before a final bottom in what is a major structural system, and then a new rally in commodities, meaning the inflation will start to go up.
So if we do have this deflation, what's the government response? Is that not just to print more money?
Yeah, but how has that worked so far? I mean, they've been printing and printing. This is not something new, actually. They printed since 2008 when it was all new, and we haven't seen inflation coming up. We have seen inflation being crushed. We have seen, and the reason for that is quite simple. I mean, what money printing does is create debt. Mm-hmm. By the end of the day, printing money is a Keynesian kind of stimulus. What we do is that we print money to lower the interest rates in order to spur debt, to spur buying behavior for people to take on debt and to start buying, and then everything will become fine because consumption will go up. What we actually see is the debt levels are now such a heavy burden that people do not spend the money. Mm. So we see that money is not circulating. In other words, if you have a body, you got a huge amount of blood into that body, but the body is standing. The blood is standing still, and adding more blood is not going to help the body recover. What is going to help it is actually getting the heart back in motion, and it needs to start beating again. And you can suffocate the body here by adding on more debt, and that's what we do with the economy right now. So we need to get to a point which nobody likes, because it's unfair, that debt is being eradicated, debt is being forgiven, debt is being restructured, debt is being inflated away, and that's the point we need to get to.
Right. Okay. But surely, if there is all this money printing going on, that's good for gold, ordinarily speaking, isn't it?
That depends on whether it's going to circulate. And everybody will say, yeah, but you've been wrong for the last 6 months. But I was also told 6 months ago that we're going to see a huge silver rally. And still, if we look to, and this is my indication really, because in my structures, if we go to the gold chart, let's just do that. Just give you a second to flip to that.
Yes, sure.
Are you there?
Yes, I've got the gold chart up. Yep.
Yeah. So what you really see there is that yes, we moved higher.
Yeah.
But the kind of structure that I'm looking to is that after you got a 5-way move up, you will always see an A, B, and C structure. And this structure that we see here is now called an irregular B correctional move, B move, irregular flat. It's called actually, and it still calls for a lot lower in gold. Because if you look to, and then if we take the next chart, for instance, I think the next chart is silver.
Silver, yeah.
Yeah. So what we have there now is actually we have a something that only moved up to the 38.2 Fibonacci level. So we only retraced around 40% of the move that we saw, the decline we saw from 2011 to 2016, and everybody's calling for a new bull market. We haven't gone there, and actually it made a new low in March. If we take the next picture, which is the GDX, it hasn't gone nowhere near the top that we saw in 2011 either. And we do the same for platinum. We can do the same for a lot of commodities. So what I'm saying is that yes, gold did that, and it's because it is in the Elliott wave world. It's called an irregular flat, and that irregular flat is something that just pushed above the high from 2011. But does that tell us that it is a bull market? We can know so far, and I think it actually has ended. But anyway, but is it the bull market that everybody speaks of? It's going to go to? Yeah, I don't think so. I think if you look, yeah, go on. Sorry.
No, so I remember last time you spoke, you said you never saw a bull market start with a sideways movement.
Exactly.
So this is why you think it's not a bull market, because you can clearly see a sideways movement, and it has gone up. But you don't believe it's a bull market that everyone's talking.
It's a correction. It is still a correction. In my, I will get a lot of haters for this. I know that. But if you look to that, if you look to silver, if you look to miners, if you look to a lot of things, everything suggests, except from this fact that you have the gold just peaking up above the top from. But look at this irregular flats. This is what you see, and that's exactly the kind of structure that we're seeing for this, what I call a B wave.
Okay.
And try imagine what's going to happen now. So last time around, when we saw a close down of the economy, and we saw that the money stopped circulating. If we're going to have the next couple of months here, from November into March, let's say, where the circulation of money is going to go down, and we're going to see liquidity becoming a serious issue, because that is the case right now. I mean, even though there's pumped money into the system, it's not flowing, meaning that companies sitting somewhere around the world, there might be swap lines to certain central banks around the world, and what have we. But you got customers, you got businesses out there that will have liquidity issues and solvency issues. And this is not a world that's the illiquid deflationary part, which gold does not like. And I've heard a lot of other stuff. I actually studied it in details. Yes, in deflationary periods, gold can do well, but that's when the liquidity is sufficient, not when it's insufficient.
Okay,
and that's what we're going to see.
Let me just bring Kenny in here, because Kenny, you're a bit of a turned into a bit of a magpie, haven't you, recently?
Yeah,
a bit of a silver collector.
Yeah, so just my situation is, Henrik, is that I'm currently trying to buy as much silver as I can afford. So I'm trying to get a short-term target of 1,000 ounces. I'm probably about a third of the way there at the moment, and looking to build it over the next couple of years, probably 2,000 or 3,000 ounces if possible. Physical silver, because I'm obviously going against what you're predicting, because I'm looking for a $50 an ounce silver. That's my game plan. And I'm just thinking, I mean, obviously you're predicting potentially gold coming down to $800 an ounce potentially, but most of the miners can't even, the all-in sustaining costs are probably around about $700 or $800 an ounce. So surely there would be a squeeze on the supply of gold, because mines would shut down at that level.
Yeah, but if price setting was about the supply of things, but we have to, but that's not just the case. I mean, the thing is that there's a supply that comes from the mines, and then you have the supply that comes from physical existing gold. And it's not just the money setting will not just the price setting will not be based on whatever the mines are going. Probably they will not be selling a huge lot of their gold. But if you have countries like Turkey or Venezuela or other countries around the world which will be in severe liquidity issues, they will be selling gold. And that's why you can have the miners might be, they will give on a lot of pressure. I completely agree with that, but I don't think it's going to be. It will not affect the price of it, because what will drive the price will be the US dollar shortage and the very severe cash liquidity situation that we're going to see.
All right. So
does it make sense? I agree with you. The 50%, the $50 for silver per ounce is conservative. I think it's going to go way past 100, but I think it's going to revisit between $7 and $9 US dollar first.
Well, half of me says I'd be quite happy if it does that, because I would just pick up more at that price. But I'm quite happy to accumulate at these levels.
Sure.
Obviously, it's not a lot of silver on the bigger picture. You know, the way I sell it to my wife is it's a bucket list sort of savings. You know, so basically buy the silveries now with a sort of 10-year outlook. You know, and hopefully 10 years is $50, $100.
It'll be much more. I think it'll be, as we enter the new inflationary regime, as I forecast, then we're going to see silver and dollar at much higher level. And please remember, my target for gold is above 8,000 as a minimum. I mean, it's really not that. You know, I'm also bullish gold, but I'm not just bullish right now, because I think we're going to see this first, because everything points to it. And in my way of, looking at, so you look at platinum, you look at miners, you're looking at silver, none of these have confirmed the move in gold. None of them. All of them are actually suggesting that this is just a bounce in a major bear market. And if that's the case, and from the structural perspective, we're going to see lows that are below the ones that we saw back in 2008. Okay. So we are getting to low levels first, and then a takeoff like nothing else we've seen. So I'm in agreement. It's just a timing issue here, and this from a structural perspective. So there's no. Go on, sorry.
Yeah, have you valued your timing then on this?
Well, the timing for me, what I'm looking into really, and is the secular bottom here, because for me it's not interesting to see 10% or 20% actually increase in this. For me, it will be to get in and the miners, gold miners and silver miners, at the levels which will never be seen again.
Yes,
and we haven't been there yet. That's what I see. So that's my game. That's the big game that I got going on. Okay. Obviously, some others as well, but this is one of the biggest ones that we're getting in at when gold hits very low levels, $800-900. You'll see miners under at extreme low levels, and some of them, if you look at the miners, none of them is really rallying. It's really something that is okay. It's what I could call a kind of muted move in many of them, and some of them are actually moving down. And I'm analyzing each of them, and all of them are following the path that I've laid out for the Elliott Waves structures.
But the miners, though, they've been in a bear market for a while, haven't they? I mean, quite a while. But you're saying this is a blip. This is like a blip of a bump before they drop even lower to where they've been in the last, 5-6 years.
Yeah, they're going below the level that we saw in 2016 and below the level in 2008 as well. Yes. So the GDX will be below $10. Yeah. And it's at 37 or something today.
Okay. And then so that is the deflationary period. That is the winter of the Kongratiev cycle.
No, that's not just the winter. The winter is much longer than that. The winter is actually since 2000, and where we can actually see that the winter really set in is when the velocity of money started to plummet. And if you look into that, I don't have the chart in front of me, but I think it was from start of 2000 around there that time, and it's just been going down ever since. And what the response from the central banks have been was print money, and they called it something else, modern monetary policy or theory or whatever they call it, but really it's money printing. Money printing does actually quite the opposite of what they want, because it puts a lot of debt on the economies, which crush inflation even further. So before we get to the point where politicians, and we start to hear that now, and I'll just forecast right here now that by the time when they realize that we need to get rid of debt, even though it's not fair, it's not something that we will take students' debt away and somebody's just been paying off their student debts for the last 10 years. It's not fair, but it's what needs to be done in order to get the economy up and running again, because otherwise we'll see an economy that keep plummeting, slumping, and we will see at some point, which is the worst part that I see, is that when we get to the secular bottom in the commodities, that chart that I showed, that you can see on my chart, when we get there and we see inflation starting to pick up, but the economy cannot start to really get back on its feet, and unemployment and claims and whatever have we keeps staying high, that's where we will see people become discontent. And we are actually seeing, some of that already, but it will become much worse the coming year or 2 years, 3 years even.
Right. And what are you talking about then? Almost like a rebasing of currencies?
Well, yeah, I think they if you really got into the heads of the central bank, I don't think they're stupid. They know what they're doing, and they know that they are debasing everything now, and that's why part of the contractive winter is also a currency crisis, and that's what we're seeing now. Talk to Turkey about that. Talk to Venezuela. Talk to other countries that have which are the weaker ones, and then you're going to see that flowing into stronger economies. At a point, you'll see that the US dollar will probably be the only currency really standing, and they will have to bring it down. They will bring it down also. And that will be the point where we see the commodities bottom out for real.
Okay.
We're not far away from that point, but we're not there yet. And that's the charts telling me that, because the charts none of them have come full sight, and none of them have completed their structures, so to speak.
But you can't. You obviously can't put your finger on an exact date. Do you have a rough idea? What would you sort of say?
I think the deflationary phase is going to unfold now. I know I said that 6 months ago. Within the next 6 months, let's put me on the next 6 months. I'll be a fool. I'll be forecasting one right and one wrong. But now what I think is going to happen now is that we're going to see close down of societies and economies again due to the COVID crisis. And I think it's going to become much worse this time, because we're not going to see that the aid packages that governments are putting out there is going to be sufficient. We're going to see close downs of the businesses, unfortunately, in a much larger scale than we've seen so far. And then we're going to see that it's going to create some problems for the economies, and we're going to see another slump in GDP and whatever have we, and it's going to be into the first part of 2021. So over the winter here, I'm looking for November, December, January, February, and maybe March for something that is going to be quite nasty in markets.
Well, I know that certainly in the UK, the Chancellor has extended the furlough scheme until March.
Yeah.
So he obviously, it was supposed to end in October, then it was extended for a month, and it's extended to March. That was before the news of any vaccine came out. So that kind of suggested that they were preempting, a pretty tough winter, and wanted to sort of see businesses try and get through it. So I wouldn't personally see any fallout until after that, because that's when you're going to start to see the real, when that furlough scheme ends, that's when the chickens are going to come home to roost.
Okay, fair enough. Fair point.
I don't know what it's like in Europe.
No, but that can definitely be the case. I just whether that's going to be the trigger, but that also relies on an assumption that they can actually keep things going. I mean, that it's actually making a difference, and that the businesses can keep going based on that kind of aid package there. So I'm starting to see, we're starting to see here that the aid packages are really not enough, and businesses have to, send people home either, despite those packages that they can get. So
I guess it
Again,
depends what businesses do with the money they've been given. And I can give one example. It's a friend of mine who runs a cafe in York, and he took a grant. I think it was 10 grand or something like that from the government, and he used that to effectively turn his little coffee shop and it was very small, into more of a takeout style. And when the lockdown eased, he was actually making more money than he ever had done. And yes, it's probably because people are flocking back out, but also the biggest problem he had was he never had time to do up his cafe. It was small. People would sit in, and he couldn't get other customers in. And now he seems to have a much higher turnover. So for him, you see, the money's been used wisely. And effectively, it's an investment in his future. Now it remains to be seen whether, of course, his business continues to function. But it does depend. I think this sort of money that people have taken, is it being put to good use to effectively reinvest in something for future growth? And of course, the money is it's either free or cheap, isn't it? So you may as well take it.
Depends on how it can be used and whether it's going to be sent to. So we have got something here where it's actually sent to the employees in Denmark. So it's of the business. So it's depends on that, of course. And there are businesses that will thrive in business environments like this. But these kind of structural shifts do not take place without some cost and without some. So there's your friend there seems like to be a brilliant business guy, but there are also others that will. Where this will going to hit them hard, and we see businesses close down, on a daily basis now, and starting to feel the pain really. So if things are getting worse over the winter here, we're only in November. 1 month can do a lot of difference. We saw that back in February and March, and again, then getting back into the assets and to markets, and then looking at the kind of valuation levels that we are seeing. I mean, does an environment like what we have now in the economy really justify valuation levels at 180% of GDP? I mean, in terms of the U.S. market, I really do not understand that. And I know people say, it's because the inflation is coming, and that's why we move into real assets, and that's why we get up to this, and we have to get this time is new. I don't see that, and I think it's a constructed way of looking at things, because we're not going to become Venezuela. The U.S. is not going to become Venezuela or Europe or anything like that. We are going to see inflation at some point. But for now, this is a fear of missing out, where people are running into riskier and riskier assets. You can check out the junk bonds and the interest levels on those around. I mean, it's becoming ridiculous, and we've seen this play out before. And what happens is we're going to see a sell-off at some point, and I think we're going to see it this time around. And the last time showed us 2 months, February and March. That was what it took. So if I'm suggesting 3 months this time, it could be it wouldn't be too far-fetched.
And on the congratulative waves, which is sort of your thing that you talk about, do you think there's because it goes back to the 1800s, doesn't it? It goes back a long time. Do you think there is sufficient data to sort of back that up over that length period of time?
Well, I can only say that. Well, if we come to what is called modern monetary theory, it has been used before. And what happened back at the French Revolution, for instance, was also printing money to solve a solvency problem. Yeah. And what happened then was that we got a revolution. We've seen this, play out before, that you try to do something and we say, this time we're much wiser and we're not going to. What I'm saying really is that if all people in the world are acting, according to the same kind of cycles in their head, so we become over enthusiastic and we become over pessimistic, and we go, if that's the case, and we have a tendency to forget. So what our grandparents saw, we don't take that as, that those were different days. And if we add these kind of fundamentals into a larger cycle, then that's what Kondratyv really is talking about. Whether it's 60 years or 70 years is not really the case. What is important thing here is that the way we approach and we try to solve this problem is the same time every time. We become we become over pessimistic or over enthusiastic around our own abilities. We wouldn't see it's only 10 years, 20 years ago we heard that we were never going to see a pandemic again. And yet we did. I mean, we do the same mistakes over and over, and then we try to solve it with money printing. But this time we are so much wiser. The thing is, we're not, and we're trying the same instruments again. And hey, guess what? The same kind of outcomes are going to be seen. That's my guess.
I mean, that's why I like to have this discussion with you, because I do think what you're saying is extremely interesting, and it's very important to be aware of it. At least be aware of what you're talking about, because then you can take actions to safeguard against it. If you don't talk about it, then it'll hit you with a surprise, and then it could be really, really terrible. I mean, I completely agree there's a problem with debt. I completely agree there's a problem with all this money around, and you sort of read about the ECB talking about having a digital euro, and you kind of think, well, I know there's some theories you can say the conspirators or whatever, but it could be that when that's released, if it ever is launched, that is given a resetted kind of value. Maybe we move off from cash and onto digital, and it's rebased against something, and maybe that is the eradication. But it's like, who's in charge? I mean, it's the central banks, isn't it? And there is a bubble, no doubt, but I think my thing is just when will it go? If it does, I mean, because you can't say that, and it'll keep going as long as the central banks keep it going, really, won't it?
Yeah, but they told us this last year before we actually saw this horrific drop in February and March. I was told many times last year in 2019 before COVID. That why go against this? The central banks got it all covered, and they got our backs. And then yet we saw a decline in the stock markets of 30%. Right. I mean, I is really down to the point where yes, they will eventually win this deflation inflation kind of war. They will get the inflation through because they are ready to crash the currencies. That's what we talked about earlier. Yeah. But to the case, that they will not be in charge on a short-term basis. They cannot be in charge. They cannot be in control on a 1 to 3, 5 months kind of perspective.
Just you touched on it there, Mark. So I was just about to bring it in. So where does Bitcoin fit into all of this? Because obviously it's quietly doing its business. It's creeping towards 20,000. I think it's around about the $17,000 at the moment. Nobody seems to be talking about it. Obviously, when they had the halving, everybody was talking about it, but at the moment, it just seems to be doing its thing unnoticed.
Yeah, and all cryptos are. So I was talking about somebody who's into Theta, which was another one, and another crypto, and all got their own stories why it's a fantastic thing, and you need to own this particular crypto. I think Bitcoin is probably the most known, and that's probably also the one I'll be investing in. But will I invest into a deflationary bus? No. And I know there are great people out there that are long, with huge amount of money in Bitcoins. But again, the structure that I look at, coming from 2019, is an ABC kind of structure where we are in the final phases of that. And again, let's see. I mean, it's if liquidity really becomes an issue because the circulation of money is standing still or comes to a standstill, I'm not sure I will be, caught with a lot of Bitcoins at this moment. Eventually, yes, again, I agree with the narrative around that when we get what in Kondratyev's world is called the run from fiat currencies is going to happen, which we see in Turkish lira, and we see that in Venezuelan and so on. But not to the same kind of degree. Obviously, it's going to. I don't think we're going to see the same kind of degree for the dollar or the euro or anything like that. But yes, eventually we are going to see that Bitcoins and everything else will be reevaluated, and let's just put it. And I think it is going to be the end of the Kondratyev winter when we get to that point where we see an introduction of a new kind of monetary system. So that could be okay. We know we printed all this money, and now we are going to stand behind it. So it's really about, how much gold do we have, and we kind of connect it to gold or something like that, and we put a crypto element to it also, which is what the ECB is kind of alluring to it right now. So I think it is something we could see, but again, timing, and if we get everything right now, and all commodities are telling we're going to see another bust. Will I be caught with a lot of Bitcoins there? We saw a drop in Bitcoin back from 10,000 to around 4,000 during February and March. That is a 60% drop in less than 2 months. Would it? And I see a support for Bitcoin around 3,000 at this point. If we see a much more severe deflation this time, would it be inconceivable that we could see another drop to that level? I think it is. I don't think it is. But will I be buying it at those levels? Most definitely I will, because I think we're going to see inflation run away at some point.
Okay. And in this deflation, you see the strength in the US dollar. You see a rush to liquidity in the US dollar.
I see a rush to US dollar because everything is nominated in US dollars. So if you have to close down your positions, whatever it is, you will need the US dollar. So there'll be a lot of demand for the US dollar. Yeah. Okay.
Yeah. So regardless that Bitcoin is a finite resource, just like gold, you're sort of saying almost everything is going to suffer except the US dollar in the short term.
In the short term, yes, I think that will still be the case. I think the rally we're going to see in the US dollar will be quite extraordinary, and then we're going to see something being done to stop that, and that will be the.
How long would you predict that the rally in the dollar would be then before we start to see inflation come in?
So first of all, I think it'll be all aligned. That's where I align all my charts. Some of the commodity charts, whether it's wheat or it's lumber or whatever have we, crude oil. So everything will come to a low at around the same time, and that's what I'm thinking will be within the 6 months time frame. And I think the dollar is going to do. So whether it's going to do from right here, or we're going to see just DXY go to 88 or something like that, could be 90, even more likely. But I think it's coming, and it will be. You won't be short the dollar when that happens.
So around 6 months' time, you see that, and then does it happen very quickly after that? Does it, as we move into the next phase?
If we look at the structures for these ending diagonals, which we can be, as I said, 80% of commodity charts have an ending diagonal or a descending wedge. If we look to that and we look to the price structure, what happens normally when we get to the end of that, that's when we see a tremendous bounce. That was what we saw the VIX also. I got some VIX ETFs that I follow. We saw exactly the same kind of structure. We got to the end of it, and then boom, explosion to the upside. I think that's what we're going to see there as well. And there are a lot of the gold miners that I'm following also. They have the same kind of structures. So we're going to see a low, which will be low that will never be reached again, or whatever it is, and then we're going to see inflation. And then what will be felt like in the economy is that we're going to see prices will start to go up, and we're going to see that the economy will not do well because the unemployment will still stay uncomfortably high.
But I guess what I'm saying is we don't hang about in the low for very long.
No. This bottom is going to be, and I think it's going to be something with. Let's think. Let's have what do we call that? Theorize, or make a theory.
Theorize, yeah.
Theorize. Thank you for testing my poor English here, but theorize around it. So what could happen? Let's say we are going to see a stimulus package coming out of the U.S. of a tremendous size at some point. If it doesn't come here before Christmas, I don't think it's going to happen. I think it's going to come after.
Yeah.
What if the coronavirus is going to, bring the economies to a standstill? We're going to see shutdowns around the world, and we're going to see all of a sudden a stock market, which actually seems like it could be coming to a something of a top with this expanding wedge, starting to decline. Let's say it happens within the next couple of weeks. Then we could see a strong deflationary bust into January, even February. And we could see the U.S. The U.S. administration coming out with this tremendous stimulus package. That would give us fiscal element to all of the monetary printing that we've seen at a time where commodities are at their lows. Potentially, that could be the trigger. I'm just theorizing here, but that could be the trigger as I see it. So it would make sense into February or January, February, March even.
Okay, good. And so, what are you doing then, Henrik? I presume you're not buying gold.
No, I'm not buying gold. I'm actually short gold. I was short gold since 2020. Yeah, 2020, and we have to remember we're $200 below the top still. So it's okay, and I'll keep shorting that until what I see will be the bottom, and then I'll get long gold. I am waiting with a lot of cash for getting into a lot of mining companies and also energy companies, oil companies, where I see a large bottom also forming.
Yes, well, oil definitely. You can see there's definitely that's not done very well, has it, this year so far?
No,
40%, I think, isn't it? Down.
Yeah, it's done. Since the bottom and back in March, it's done fantastic, of course. But if you look at the oil companies, they haven't bounced anywhere. No. So you look at Halliburton, you look at ExxonMobil, you look at those. They're not doing well, and it looks like it looks to me like just another correction before the final bust.
Okay, so you're holding dollars or cash, euros as well, perhaps, and shorting. Shorting the things that like gold and commodities.
Yes, shorting. We're looking into at the Zeberg report. We are looking into various trades, and there are some great trades coming up. For instance, we did see the top in lumber. We unfortunately was just stopped out because it just spiked above, and then it fell 35% the day after, the few days after. Still looking for some opportunities there because the bottom in lumber is not in as we see it. The bottom in rice is not in. The bottom in wheat. There's a lot of commodities that are going to do really poorly over the next coming months, and that's what we're trying to do on a short-term basis.
Okay. Kenny, any final thoughts from you?
No, it was just quite good to sit back and to listen to Henrik had to say. Sometimes the podcast, it's myself leading or it's Mark's leading, but it's been one of these ones where you've taken the lead, Mark. So it's almost like I was a listener. So. Yeah, it's always good to have you on, Henrik, and just
thank you.
Get some views that are maybe running against the herd. So it's not a bad. I like to try and do that with the shares, buying as well. Sometimes if everybody's selling, I want to be buying. Sometimes. So it's good. It's good to have you on, and we should have you on more than once every 6 months because I think it's been 6 months since the last podcast.
Yeah, it's back in May.
It was back in May, that's right. Yeah, it's May. So 6 months' time again will be good. But so shall we finish? Do you want to finish on a final word, Henrik, on perhaps your Zeberg report? I know that was in it was up and coming last time we spoke, but it's fully functional now. We want to tell people what it is and what they can do with it.
Yeah, so the Zebergreport.com is really just it's a service. It's a site where we are. We got a lot of subscribers now, where that wants to see the bigger picture of things. So, of course, we want to trade, and we want to earn money on a daily basis, and we will also we are putting up some trades there. But the main focus is really to get this right, because if you get this right around the secular bottom in inflation here, the opportunities will be. There will be so many opportunities out there that we will grab hold on and hold for a longer time than anybody else will probably dare to do, because seeing this deflationary bust will be something that will put some credibility into the theory of, okay, I actually dare to get into this particular asset when we see the bottom, because we were expecting something lower. Imagine if you're into gold now and you see a bust of something like 50%, would you want to get in there at that point, which actually could be to the bottom? And this is one of the things that we're looking into, but also, as I said, other commodities. So this is what we're doing. We have a live show on Sundays at 5 p.m. CET.
Okay.
Where we have the guests in, and I go through a lot of charts and try to stay on top of this inflation deflation kind of scenario, and try to get people on the right side of the trades and of the economy.
Okay, so that's a monthly subscription that people can subscribe to.
It is, yes.
Okay, and what's the website or Twitter? What's the best way to find you?
Oh, so it's either at Henrik Zeberg, which is my Twitter handle, or it's thezebergreport.com. Zeberg with a set like sorrow. So
yes,
look it up and try to take a look at it.
We'll put the link out in the tweet, no doubt, when we put this this podcast out. But
excellent, thank you very much.
Listen, it's great to catch up again, and so it's been 6 months, and maybe we should touch base again in March time and see where we are.
Let's do that. Yeah, it would be great to do so.
Great. Okay, thank you very much, Henrik.
Thank you.
Yeah, appreciate the time.
Thank you for listening to another podcast from Market Musings with Fairbairn and Russell.